2, 1. Good morning. Welcome in to another episode of Good Morning NASDAQ. You are live right here on the 11th day of October 2023 with your very good friends and mentors, Dom, Huddy. Kyle will be joining momentarily, but we try to keep to a pretty strict time schedule here. What are we, 3 minutes late? Pretty on schedule for us. Today is Wednesday, which means we go through our watch list, talk about what we wrote and gave to the Clover folks over in the Clover room. If you want that to be you and you want our watch list every single night, 7-day trial, link in the description. Get you access to everything that we have to offer for 7 days for $7. The Huddy special.
Is that the Huddy special?
Yeah, it was a free trial at first, and you were like $7.
I didn't do that.
And you get access to video lessons, webinars, trade alerts, watch list, the chat, all the good stuff. We got Ramon, we got Joseph, we got Nemo, we got JJ. Are always faithful in there, commenting first. If you haven't already, we do have a very strict policy here. If you're watching, we do need you to hit that like button, hit that thumbs up button. It really helps the algorithm, I think. I don't know, people, I've seen YouTubers say that, so it helps the algorithm. And for us, really all it does is it helps our relationship with management and having to, them pop in, write comments, or message us behind the scenes and be like, you're not asking for them to like the video. You're not switching scenes enough, blah, blah, blah. So if we get a really high like to viewer ratio, everything is cooled off in the management conversation.
That is true. That does happen.
I'm going to have a sip of my coffee here.
Ooh, I want some coffee. Okay, I'll kind of start us off here.
It must be starting to go into fall and winter. We got a hat on for Mr. Huddy indoors.
It's I just got back from the gym. It's kind of cold outside in the morning.
The warm weather's gone.
Yeah, I could take it off. I'm kind of sweating now, but we'll keep it on because it looks cool.
You're definitely the kid that wore like a hat to school in the summer.
I had a lot of hoods on. I was like 6th grade sweatshirt every day, even though it was like 95 degrees in LA. I'd still have a sweater on.
I believe it. You're a sweater guy.
I'd sleep in the back of the class. I'd put the hood on and I just lights out. It was the most disrespectful thing now thinking back, but like I didn't hide it,
You didn't hide it?
It's sleep time. Always after lunch too. After that like hot lunch where I was in the sweater and I was sweating, playing football, whatever it was, I'd get back in. I'd be like, put the hood on, let's go to bed. Anyways, that's enough about my young years.
Are you gonna start with some stocks? You want me to go to a chart?
Yeah. I'll kind of start with the two big gappers we have today that I do have half an eye on. As they are interesting. TPST is the first one on the list. It is up an astonishing 400% from yesterday's low of 17 cents to pre-market prices of $1.30 right now. Not sure what I would do with this because I don't short day one spikers, but anything that's up 400% in trading volume is going to go on a watch list and save it for a later date. I expect this thing to have a ton of range today. It's up literally 450%, so it's going to be wickety. It's not for me because I don't short day one gappers, but I imagine there's a lot of range there for that one if you know how to time those types of things. And the other big gapper is WHLR. This one, in my heyday of short selling, just about anything that was gapping up, I used to do it to find edge, and then I found I severely don't have an edge. But any kind of edge that I ever tried to find was within dilution parameters. And WHLR is a dilutive stock. They do have, from my calculations or from what I've read, which
go to your notes.
Yeah, which is subject to my own understanding. I mean, I don't understand everything. Is that they have 2 point something million shares that they can convert into common stock at $1.45. And every month there will be more. And this is the first day that they can redeem and convert those shares. So I expect dilution to hit the markets today. I think this whole gap up is augmented in order to sell that dilution. Again, in order to sell dilution, you need liquidity. So it's not like an automatic they're going to be selling all day. They're going to do whatever it takes to bring in liquidity. And then I think they're going to attempt to sell just because of the timing, right? The timing is just too on point. I think they had to redeem on October 5th, and then the soonest they could sell was like 5 days after October 5th. And then all of a sudden on October 11th, you get a 300% gap up, like on like no news for a REIT stock. It seems like something's going on behind the scenes, and they want to sell some stock. And it's all there in BAMSEC if you guys want to go look it up. So that's kind of the research I did on Wheeler this morning. So just being aware of those two stocks and their circumstances. I think TPST is like biotech phase result news.
Yeah, they got like 3 different articles about they're presenting somewhere. They are some research. They put out a report. Whatever it is, it's nice to see a 454% gapper on a relatively clean chart. It wouldn't be Good Morning NASDAQ if we didn't go over a few gappers and tell you that we're not going to trade them. But really interesting here. It's, again, kind of what we wanted to see, even if sector momentum doesn't play out with all the stuff going on in Israel. If it can bring some heat to the market and we continue to get runners, that's all we really ever asked for over here in small cap land, is just give us volume, give us liquidity, give us a range, give us patterns. Yeah. My friend Pat took a turn.
Yeah, he did.
Oh, there's Kyle's beautiful smile. I want people to see him. Look at him. Talk, Kyle.
Good morning, NASDAQ.
He's tired.
I almost just slept right through the whole damn morning.
He sent a little message like might be a little late, and I think that meant like I'm still in bed.
It was one of those mornings where I set my alarm for about 30 minutes ago. It went off. I hit the dang button, and the next thing I close my eyes, and the next thing I know, I open them up, and there were 30 minutes later. I'm like, holy crap! So I apologize.
Don't be sorry for being you, okay?
All right.
And you're also on the Pacific Coast. I mean, that happens. It happens.
It happens.
It would happen a lot to me.
Yeah.
But alrighty, we're here. What do we talk about? Am I up for
we just kind of hit the gappers. If you want to start by going through just what's on your watch list today.
Yeah, so I guess we'll start with I think the obvious, which is the Israel defense stocks. We got PRZO, HUBC, MTech, and then two other ones, MOB, MOB, and then SPCB. Frankly, I'm taking a pretty lackadaisical approach to these. I was pretty on top of them going into Monday and Tuesday, thinking that this was going to be a hot sector, thinking they were going to run a lot. But unfortunately, if you were also long them like I was, they all gapped down, which is a bit of a disappointment. But it actually, it happens. It's like not every sector is going to be huge and run massively every time. But that doesn't mean just because they didn't run this time, it means they're dead. Like typically, hot sectors can warm up and then kind of ease into it. So, I'm not saying it will, but this run could have been the warm up to get everyone's attention. And, unfortunately, it is not a good opportunity in terms of how it's caused, right? Like no one wants war. But unfortunately, if it does get worse, these probably will run higher. So it's like, I'm not hoping for it by any means in the real world. But in terms of the stock market, I am keeping an eye on them just in case they do continue to run higher. I'm on the boat that they aren't, but if I'm proven wrong and they all kind of come back to their breakout levels, like PRZO back to, the high twos, HUBC back to, where was HUBC at? I have too many dang charts up, but HUBC back to 80 cents. And then CYB or SBCB hit, 113 yesterday. So there's again, I'm in the boat of them not breaking out, but if they do if price action proves me otherwise, I want to be watching them to know that they're going to happen. So there's that. TPST was a after hours newser yesterday about phase one.
Oh my goodness, we're at 679% now.
Yeah, and that's kind of why I wanted to wake up early, was to see the conference call. Unfortunately, I just completely missed that. But honestly, it's better that I missed that, because if I was short at all, I 100% would be taking losses. And now looking at it, we are just gone straight up from 140 to $2 here. Don't know what was said on the conference call, so part of me doesn't want to short it no matter what. Maybe it has a huge gap and crap here. Being up 7%, it sounds really hard to sustain this still.
You don't think it can go 1,400 now?
Yeah, but we've seen things like VTGN where it's gone up 6,000% pre-market here. So, yeah, I don't really know. the short answer is I don't know where this is going.
Dude, that's pretty insane volume too. Almost 50 million in pre-market on a $2 stock. That's like impressive.
Right, it's huge. So I think a safer bet, regardless how much it if it gaps and craps itself or keeps running today, like tomorrow being a better short. Unless it completely dies like sub 1 today, like completely gets obliterated, I don't see why this wouldn't possibly have more downside tomorrow. But again, I just woke up. I'm kind of behind. I want to maybe do some digging, see if I could find what was said on the conference call. That might give a little more light to the situation. But for now, I'm just gonna kind of watch that. Other than that, we have like IPOs like MSS and PMEC.
What was the first one?
MSS, mother, sister. But only trading for a couple of days, nothing much happening, but I am keeping an eye on that just because it is a fairly new IPO to see if they can get running. Same thing with PMEC, but PMEC kind of crapped itself yesterday pretty hard. So really no play there necessarily. I'm just kind of keeping an eye on because they are newer charts. Other than that, there's a lot of other like tickers I'm just watching, but not really trading, like AMC, BNOX, CYBN. I'm sure that you guys have those on your watch list. You might want to talk about more in detail, but I'm just keeping them up, but I have no really interest in them. I just want to make sure. For me, for those who are Clover trading know, I always put a bunch of tickers at the bottom that I'm, quote unquote, like staying familiar with. Even though they're not anything I'm going to be trading anytime soon, but they're just charts that look interesting, and I know that they can become interesting in a matter of days if they really want to. So I just keep them on a watch list, just keep an eye on them. So that's pretty much it for me.
That's a great tactic. I think far too many beginners don't even make watch list, which I think is a huge disservice to yourself, because going into the morning, especially in the first few years, can be a little bit of, there can be some anxiety there of like pushing buttons of like all of a sudden prices are up or down from where you saw them yesterday and you're making plans on the fly, but you're not quite skilled enough yet to make plans on the fly. Having a watch list and continually narrowing it down, like Kyle's talking about, can be super beneficial, because at least at the open, you're watching 2 or 3 stocks only. You're not going to be putting yourself in positions where you're watching TPST out of the gate when you know you're not going to trade it, and then you miss a CYBN or a PRZO or something else that you actually planned on trading. So having that list of stocks that are interesting, as he put it, I think it's a very good practice to have in your arsenal on a daily basis to keep you updated with the stocks that are moving and keep you prepared. But how do you want to go back and forth just because you always go last and then you're like, you have no tickers to talk about? So we can, I think we have
Wheeler. So
no, but you're probably going to talk about PRZO, HUBC, and we can just kind of tag team them with our plans if we have the same stock.
Okay.
So which one do you want to start on?
PRZO.
The PRZO HUBC bundle play?
Yeah, the 2-for-1.
And you can start by saying how last night me and you were trying to figure out the edge here and the big play, and then you talked to Kyle, and Kyle's like, I'm not going to touch him. I'm not really interested in him. And how trading is just kind of like this funny thing where sometimes you can overthink it, but sometimes you're not thinking about it at all. And who's right? So kind of where's your head at with PRZO?
Yeah, so my head's kind of still inside the sector. With PRZO, and regardless, and Dom and I talked about this, regardless of it being a sector, it's also just a decent runner that's holding its levels really nicely so far.
It's a good daily chart.
It's a good daily chart. It doesn't have overhead resistance. It doesn't have dilution. It's a low float stock. It's trading decent volume, even on its first red day, and held like that $2 level. We're creating a range in between 2 and 285. And the hard part about this stock is it's not really like a clean runner. It has a lot of wicks up and down. It's going to be really hard to, if you're like buying the breakout, let's say you're buying 285 on a multi-day breakout, like the idea is like, you're going to get scared out of that position. Like it's going to wick in ways that are going to make you very uncomfortable. That's at least what I foresee happening based off its price action. So kind of being the first to like get at the breakout seems like a loss, but at the same time, like, kind of buying that support level at 2 feels like you're buying the stock right before it drops off a cliff. So it's a tough position to be in, but if this thing does, hold this 2 base and come back for 285 and breaks out, like, it's one of those tickers that has, the criteria that can run pretty well. Just a matter of whether it can hold this range and not taking a loss before it's confirmed that, it can break out.
Yeah. I tend to agree with all that. We kind of struggled last night to make an exact plan on, are we playing for bounces? Are we leaving it alone and letting it fade off? Are we thinking that this is, if you get a good entry, sub 220, risking 2, or are you playing for the big picture breakout down the line? And it's all really kind of difficult, but with all of those options, I've learned through some experience, mostly negative experiences, that it's best just to pick one avenue that you really want to play off of. Having regrets about what you did in hindsight, like, if you ended up playing for the bounce and you bought 220 and it spiked to 280, you sold, and then it went and broke out, but you planned for the breakout and you sold into the bounce, you're going to regret that a lot more than if you just planned for the bounce and traded the bounce. You'll be a lot happier with yourself. So kind of just, again, with watch lists, knowing exactly what you want to do with it, and then executing upon that, so that way you don't have any regrets on the decisions you made. With PRZO and HUBC, I kind of feel like no matter what, HUBC in the next day or so, we saw it yesterday, is going to follow pretty closely to what PRZO is doing. So I feel like the easier play is to attack HUBC. I don't think HUBC is really threatening to break out anytime soon, like I think PRZO could, just with understanding distance from the breakout level. HUBC is like 100% away, where PRZO is less than that. You're talking about 2, and this is after hours, like 285 is the breakout level. In a perfect world, like, to make this all really easy, this just fades off sub 2 this morning, and then we get to play first green day in the coming days. But I really just want to be focused on, if PRZO has a really, really strong open and I'm not there for it, I don't really predict that, and I don't catch it, that I could follow that by trading HUBC and find a way to get a penny or two of risk and make 5 or 10 cents a reward if it's going to follow PRZO on morning strength. I would never play HUBC for a breakout down here. I had another thought. And then with PRZO going forward, I just kind of structure these type of multi-day breakouts as really putting myself in the mindset of any short sellers that are in from 180 to 280, and just thinking about, if they're being patient with their position, when am I going to get them to get shaken out, and what does that price action look like? And then trying to use that to my advantage on the right day of the breakout. Next stock, Huddy.
Next stock?
Yeah, do you have any?
No, I mean, my only watch list is like PRZO,
All right.
HUBC, so,
All right.
and TPSD and Wheeler.
CEI is on my watch list. Former runner of former runners. We've seen this stock pop up pretty much every year of our career at some point. It's in the energy world. I think Huddy kind of went over this yesterday in the webinar, where it's not necessarily means that this whole conflict in the Middle East right now is going to affect oil or gas. But if
Can
does,
I expand upon that one more
hey,
time?
why don't you expand upon it?
Okay, so I think a lot of traders are trained to think, okay, war, buy oil and gas stocks, but there's one like missing component that was very blatant, and in my opinion was the edge back then, which was the oil and gas indexes. Like, they were going through the roof, breaking out. Like, what, it hit like 120 a barrel or 130, right? That's not what we have going on right now. And until that dynamic fact changes, like, I don't think there's sector momentum because of this war in the oil and gas. And CEI might be a nice chart, fine, but until we actually have the macro movement first, I don't think it's going to trickle down the same way that it did, back with the Russia-Ukraine war. Maybe it does, but we're missing that component for sure.
Dan, as I get back into CEI, make sure that you've hit the like button. I see that we are below 50 still. That is unacceptable, and frankly a little concerning. So can you please hit that like button, hit that thumbs up button right now? Let's get us over 50. We of course like to have a 2-to-1 ratio, and fortunately there's too many of you watching to support 45 likes. We need a lot more than that. CEI for me, yeah, CEI actually kind of popped up before all that stuff happened in the last week. So that's why it's kind of interesting to me. On decent volume, former runner, a lot of room to run before it runs into real resistance. Cheaper stock. So I think if there's a world where I can risk a penny or two and make 5 or 10, I'm pretty happy with that 10 times out of 10. And it's just setting up in a really nice multi-day fashion. Let me take away extended hours. And starting to hold higher lows into the key levels. 35, I think, and 40 cents are the key levels. I have kind of traded it the last 2 days, but sold for small wins, small losses, because I'm not just going to hold overnight expecting, I don't really want to be in these things longer than I have to be. So I'd rather be there on a day where there is an increase in volume. We are spiking towards 40 cents, and I would be more interested in swinging on that day versus just weak closes or sideways closes, because there's no need to risk after hours or pre-market bad news on a stock that has been pretty dilutive in the past. So this one, I'm watching the 35 to 40 cent area, CYBN. More illiquid stock, trades a lot like an OTC, has a pretty good catalyst with Cohen, correct? But one that's been running for a while now, has a good history of multi-day runs, and is just, quite frankly, too good looking of a chart right now to not be watching. And right now we kind of have a little flag, a little multi-day breakout setting up over 67. Right underneath the big picture 71, 72 area breakout. So I do think if we break with conviction 65 to 67 and close above 70 cents, we probably have at least a 2-day runner on our hands. Be really careful about liquidity there. Can have wide spreads. Can be one of those where I think I said in the webinar yesterday, you really want to be in when you're out, but once you're in, you really want to be out because of lack of liquidity. So be appropriate with size there and understand the risk and slippage and all that good stuff. But one that I'm watching kind of closely as well. Let's see what else is on the old list of watches. RVLP, I don't think there's anything for me there today, but this is another cheapie that is doing really good volume off its lows. Had a really nice breakout day through this prior resistance in the 16s back in September, and then the highs set in early October. So if this sets up for another multi-breakout over this 20 cent area, there is room for this to run. It is doing really good volume. It does trade quite cleanly on the days that it's moving. So watching that one particularly close as well. I think that's all mine. Let's see. You guys want to answer a few questions? There's a couple questions about. Okay, yes, go, sir.
I just want to say, a couple minutes ago when you started, that I think it's funny because anyone who doesn't know your humor would like say it's their first time watching a Good Morning NASDAQ, and they hear Dom immediately go, we're not at 50 likes yet. This is unacceptable. I was like, oof, this guy's harsh.
Hey, it's up to 70 now, so it worked.
We go. Thanks, people. Everyone there listens.
Hey, we appreciate you.
Yeah, there we go.
There's a couple questions about GRTS for you, Kyle. What are you thinking? Are you interested in a first red day? Looks like a blow-off day yesterday.
Yeah.
What's your plan here, Kyle?
I honestly, guys, I'm not a fan. I'm really, really not. I'm looking at it, and yesterday it had a pretty hard top wick, making everyone think today is going to be bearish, which it totally could be. Like, we could easily see this at 250 today. But like, this is not the daily chart that is ideal. Like, nothing about this screams to me that it's a good short. Now, granted, it may be a short nonetheless. Like, again, it may be to 250 and you make money. But like, if I had to grade this is like a C-.
Wow.
This
tough teacher.
I see what everyone sees, because again, Kyle 3 or 4 years ago would absolutely be shorting this. But myself today, I just don't care for it. The volume's not blow off, like it's the same every single day. Yes, it's extended. That's like one of the only things going for it. But every red day it's ever tried to have, it's been very small, or it's closed green, like a green candle. Yes, eventually a red day's due. Don't get me wrong. Eventually it's going to happen. But this reminds me of like AAOI, for those who remember back in over summertime.
Oh my gosh.
AAOI, I lost money more than I made money, because I tried almost every other day to short this thing, like in the name of that this is going to pull back eventually. And what do you know? It runs from $2 all the way up to 16. Like, it just isn't. And yeah, there was reddies in between there, but like trying to catch them, trying to be there for that day, led to more losses, led to more wasted energy on a ticker that really was never ideal to begin with. And so when I look at GRTS, I'm like, yes, could it have a red day? Totally. But like, what's the actual idealness or odds of this really offering something that's going to not drastically, but let's say significantly give me a solid win? I just don't see it here. Like this is a trade that yes may work, but there's just no world where I risk a significant amount of money. And if I'm not risking a decent amount, like I'm not also going to make a decent amount either. And again, that's me being picky in 7, 8 years in. So if you're a beginner, I totally get it. Like trust me, 2019 Kyle would have been trading this every single day, but 2019 Kyle also would have been taking much more losses. So it's more personal preference. I think I'm going to stay away. But again, if I close my eyes and I wake up by close, I can see this thing at 250. But will I have any FOMO whatsoever? No, because I could also see this thing back above 3 today. So those are my thoughts.
Those are his thoughts, and he's sticking to them.
Yep.
A couple other tickers. AVTX, is it still on watch? It's still on watch, yes. As long as it's holding above 12, I made the promise to myself that I'd continue watching it. I think the 16 area potentially leads to the 22 area, and the 22 area potentially leads to the 30 area. I think if it were to do something like that and have a methodical breakout after breakout after breakout to the big one, it would be very reminiscent of TTOO, which did that in the summer, right? Kind of in this area where had a big move, had this little lower high, broke out of that, consolidated, then broke through the big one. So watching to see if it's like that, low priced, doing great volume near its lows. So if AVTX wants to comply with that, I'm all about it. Trick here is just not to become an investor, I think. I kind of thought the same type of stuff on eBet, ended up getting reverse split on. And that was a fun day. So kind of really want to be there in the days it's doing increased volume, like 1 to 200 mil minimum, and playing for the part of the move that makes sense, not just buying 14 and saying it's going to break out of 30, buying 14 or 15 thinking the breakout over 16 leads to 20, and if I can make 3 or 4 cents risking half a penny, that's really good risk reward. Move on, reevaluate. So that's kind of the plan with AVTX. How low priced of a stock are y'all willing to short? I know the 250 rule makes lower price stocks like 10 cents not worth it. Would you still not want to short something like 50 to 70 cents? How low is too low for you?
I've always had like a 20-cent number in my mind that I'd probably stop carrying at 20 cents because, again, like, and it really is broker dependent on what your commission structure is. But at most high net worth brokers, if you're shorting anything in the 20-cent area after fees, like, let alone your fees alone are going to be like 10 to 15%. So let's say a stock drops like from 20 cents, 25%, it goes to 15, decent gain, but you have to count the 10 to 15% in fees that you took right off the bat. So you're really only looking at like a 12% trade, even though it's literally your trade's cut in half. And so if you think about like the risk profile on the other side, like when you take your loss, you're also taking excess loss based off those fees. It's not just your normal loss. There's a lot of fees that are going to add up. So the risk reward profile stops to make sense to me around that 20-cent area. And like even at 30 cents, it's still there, but there are a few circumstances. I think like Mullen earlier in the year had a good spike from like 10 to 30 and then unwound back to 15. So like if I think a stock's going to fall 50% in a day from 30, like, okay, I don't care about 12% of slippage. But from 20, it gets really hard to make the math make sense. And at 30, it still is really hard to like even find a 50%, destructive stock. So that's kind of how I think about it. At 50 or 70 cents, like you can find, like, take HUBC yesterday. Like you can find a situation where you're making 30 cents to the downside. And then again, that like 2 to 3 cent cost isn't really a problem in that circumstance.
Very nice. Kyle, we'll wrap it up with this question and get on over to the Clover room. SMX first red day question mark. Is it one? Are you interested in it? Why or why not?
SMX. Let's take a look. Well, first it's a 2 million share float. So right there, I'm not a fan of that low of a float. Technically, yes, you could call this day a first red day because it has had 2 green days. However, the first green day had almost no volume. It had literally 2.5 million shares traded, and the next day had 62 million shares traded. So in some ways, this has only been up a day, if you want to call it, in terms of who actually has cared and watched it. Secondly, it's down 20% pre-market. That's kind of the move I would have been looking for. Like I would have been looking to short at red green and be covering here at 230, not shorting at 230, hoping it goes to 2. So if it spikes, yeah, it could be like an overextended gap down style play. But again, for me, I'm going to be a little bit picky today. At 2 million shares of a float, that's just too low for me. I've always said this. I've never made a significant amount of money. No big win. Only big losses have come from low floats for me. And so I'm not going to try to test those waters and find out again on something like SMX today, especially already being down 20%. Like this is why I hate overextended gap downs in many ways, because a lot of them gap down to the price that I would have covered, not short. So I'm going to leave that one alone as well.
Yeah, it's just down 20% today. I really try to, this is why I use the intradaily chart. What I have up today is like, show me the entire run on like a minute chart or a 5 or 10 minute, and show me where we're at in the pattern, like relative to the entire move. Like we're not just down 20% today. We are down $1.50 off the highs, and we're 80 cents from the lows. We are closer to the lows than we are the highs. Exactly. How much more do you really want from it? And we're not going to say these crappy companies can't retrace the entire move, but we're looking to take advantage of like an edge over and over and over again. And risk reward wise, like this is why we even struggled, like you said, on overextended gap downs. Even if it were like it closed 2 days ago at 340 and you wanted to short it and it opened at like 3, yeah, there's more downside than there is right now, but you're still 380 is the level, and that's really far away. And so there's more to it than just what I just said. It's like managing a position, being able to get the size you want, not getting shaken out into moves towards resistance levels that should hold. But I encourage you to kind of look at all time frames and just realize, is the trade even really worth it at certain levels once you have kind of identified all the levels that matter. But all right, it is 9:19 a.m. in the morning. What is today, Wednesday? All right, we have Wine Wednesday tonight, 7 p.m. Eastern Standard Time, right here on the Clover Trading YouTube channel. We thank you so much for showing up every single morning at 8:45 a.m. We really, really, really do appreciate it. We love the likes. We love the validation from our peers that you guys liked our content. If you want more of us, want more of this, video lessons, webinars, weekly, trade alerts, watch list, chat room, 7-day trial in the description. Link is there, clovertrading.io. Get involved, join the rocket ship, be a part of the movement that is Clover Trading. We have a great time over there. Don't laugh at me, Huddy. Anything else you guys want to say before we wrap it up?
No, don't force it, guys. Kind of busier week, but also I've only taken a trade. I didn't even take a trade on Monday, only on Tuesday, and maybe we'll take one today. So I think the reason why you're hearing me say I'm picky or being picky is because it just feels so much better being in control and picking and choosing your spots versus trying to chase anything that's moving. So be patient, stick to your trade plans, look for ideal plays, and just execute. Trust your trade plans. So
and be the best version of yourself.
But you can be, yeah. Oh yeah.
And I'm just going to read something from Meditations here, just a random thing. For the stone which has been thrown up, it is no evil to come down, nor indeed any good to have been carried up. So that's your little words of wisdom today. Have a wonderful day. We will see you guys at 7 p.m. Eastern Time right here on the Clover Trading YouTube channel. Have a fantastic day. Be safe and be the best version of yourself.
Bye, everybody. Peace.